Hindustan Zinc rally continues. The stock is up close to 30% this month. The silver prices surge, now at record levels above the $68 an ounce. The metal index is also the top sectorial gainer today.
Varun Beverages is up nearly 2% in early trade as board approves the acquisition of South African company, which is a soft drink maker, Twiza Proprietary, for 1,100 crore rupees approximately.
Fortis Health is up close to 2%. Company expands its presence in Bengaluru with the purchase of around 125-bed hospital for around 430 crores. JM Financial also upgraded the stock to a buy rating with the target price at around 1,093 rupees.
And GE Vernova T&D wins an order to set a 2,500 megawatt from Adani Energy Solutions. This is for an HVDC project. The stock rallies as much as 8%.
KEC International surges in trade. It's up 4.5% as the Delhi High Court stays in order excluding the company from Power Grids projects. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Vinny. And Vinny joins in on the show. We meet with the same fate.
Same fate, green. I'm more than happy for that as well. Bulls are happy as always. I think you should anchor with me now, Nigel. That's my proposition that comes in. Even Bulls are saying that.
Well, all the fans are cheering your name.
No, but today what's shining is your metals pack, right, Nigel? Silver, that's gaining away in trade. IT managing to hold on to good gains as well.
So if someone wants to put a ring on it for Vinny, well, it has to be silver, not gold, not platinum. It should be silver.
The way it's run up might as well.
Vinny in big demand this morning. Well, the market's holding with gain of around 150 points. We're in good mood, as you can see, getting into the holiday season, and Vinny twinkling as much as some of those metals. That said, I think it's a good time to get you a couple of ideas for profit in our special segment. Let's go across to Madhu Chanda De of moneycontrol.com, who joins us to talk about a stock that she's tracking closely. Madhu, over to you.
We are talking about Persistent System that continues to surprise positively on execution. Growth remains in the leaders quadrant and has been supported by its three key industry verticals, BFSI, high-tech and healthcare. The key markets of North America and Europe have also fared well. The company expects close to 100 basis points improvement in its EBIT margin in FY26 and a similar quantum of improvement in FY27 as well. The scaling up of AI-led projects should help margin. Persistent has seen steady order inflows and the outlook is promising. The company clearly has an AI edge, as is evident from the improvement in revenue per employee as the non-linear model is at play. The company has been proactively integrating AI-led solutions in its top 100 client accounts, which is close to 82% of its revenue. The launch of SASVA 3.0 should accelerate client engagement and drive AI-led engineering productivity. Amongst the service companies, we see Persistent as clearly having an AI edge, and the strong growth in earnings should continue.
Thank you so much for that. But let's also welcome on board Shivangi Sarda for a technical check on the market. Shivangi, good morning. Thank you so much, as always, for joining in. Today, 26,000, about that mark comfortably. 26,100, actually, about that is what the Nifty is trading at. I want to know the levels that we should be keeping an eye out on, because every time we touch around these levels, we see a fall coming in the market then. Could we expect this to sustain this time?
Very good morning. Thank you for having me. So, of course, we have rightly seen that, 26,000 has become like a tricky level for the markets as of now from the last few weeks. And we've seen that, today after the gap up opening, the index is comfortably trading above those levels, which is a good sign, which is being backed by a lot of sectors in diverse. So, that is also a plus. Call writers have started to unwind their position at the higher levels. So this indicates that it's a plus. We've seen that FIs and the DIs both have been buying from the last two trading sessions. So overall, positive momentum to continue here for Nifty index for the next up move towards 26,350 levels. And we would, like to have a support near 25,750 marks on a positional basis, but on an immediate basis, 25,900 would do the work. So this is the take for Nifty. Buy on decline to continue here. Of course, Bank Nifty has been seeing resilience, and we've seen that it has consolidated from the last 13 odd trading sessions. Today, very well, comfortably trading above 59,000 levels. So we would actually watch out for 59,000 as an important support for Bank Nifty going forward. With the next targets of nearly 60,000 levels, of course, we are going into the monthly expiry week as well. So a lot of volatility and momentum will be expected here.
Let's get to individual stocks then, Shivangi. What's on your radar?
Absolutely, Nigel. So stock-specific ideas are, in plenty today. We have seen momentum in a lot of auto, some of the NBFC space stocks, and the metal, of course, is shining bright. So the first pick on my radar would be National Aluminium. Nalco has been seeing consistent returns, and we've seen on a year-on-year basis also it has outperformed with over 35% return till date. We've seen that it has nearly consolidated from the last 20 trading sessions with steady up move, and a long built up from the last 5 trading session is indicating that good buying interest is emerging here. Now, price action can be seen today with IVs cooling off. So the next target that we're looking at for Nalco is 300 levels with a support of 282. The second pick on my radar is Paytm. Of course, this space is showing a lot of strength, and of course, all the disclosures applied. We've seen that Paytm has exactly retraced from its 50 DEMA, and even on a month-on-month basis, the stock has.
I think lost that line with her, keeping an eye out Paytm as well. But Shivangi, thank you so much for joining in nonetheless and giving us those picks as well as in terms of the market view as well. But on that note, we're going to sip into a very short break, viewers. Don't go anywhere. After the break, we'll be joined with the management of Sensex Chemicals. They've acquired some companies in the United States as well, expanding their presence there. What does this mean for the company? We'll discuss all of this after the break.
Welcome back. Markets holding with solid gains. The Nifty Bank actually has slipped a little bit from the top. It's hovering around that 20-day MA. The Nifty Bank is the one that I'm talking about. Well, let's focus on Sensex Chemicals. We have with us Sanjay Tibriwala, the Executive Director of the company, who joins us on the show. Hi, Sanjay. Good to have you on the show. It's been a while since we spoke, looking younger and fitter. So good on you, mate.
Thank you so much, Nigel. Same for you. Thanks for having me here.
All right, Sanjay, we've got a few points actually we want to talk to you about. I'll just highlight that first. Synergies from the recent acquisition that Sensex Chemicals has done. Inorganic growth plans. What's the outlook from here on? And growth and margin outlook for the company. Sanjay, let's start with the first point. You've done an inorganic growth. 53% in a company is what you've acquired. So I wanted some clarification first. Do you have an option to go ahead and buy the remaining 47% stake? And also this acquired entity, what kind of revenues was it doing? And what kind of improvement are you looking at in terms of growth?
So yes, certainly we have clarity about the next 25% stake also, which will be done over a period of years. And eventually we can go for the 100% also as the time passes by. Revenue-wise, they have a combined revenue of around 600 crores broadly. And this is a perfect synergy company for us. It's into high performance specialty single stop solutions. And we have invested also as a growth capital. So it's also the investment has gone, 30% of the funds has gone in the company. And the shares are subscribed from the company also, which will be used to execute the huge orders which are piled up.
Okay, got it. So effectively, this acquisition actually nearly doubles the revenues of your company, right? Because you're going at a ballpark 550 crores and you're acquiring a company of 600 crores. So doubling the revenue is good. But on the margin profile, if I got that number correct, they're doing high single-digit margins to double-digit margins, early double-digit. While you at the company, you all are doing close to around 20%. So is there a plan to actually, scale up these margins and bring it closer to what Sensex Chemicals does today? If yes, by when?
Oh, absolutely. There is a lot of financial, benefits which will be seen in the company in terms of getting a better pricing from the suppliers, raw materials. At the same time, the products have a great synergies of Finotex and Crude Chem Group, and there will be a lot of cross-selling between the companies, customers, etc. So we are very happy to know that there is a lot of excitement in the customers. Even they're asking us more and more product lines from both sides of the companies. I think eventually they should be picking up. So we are very confident to do it in a couple of quarters or something like that.
In a couple of quarters, you'll get these businesses to your margins of around 20%, right?
No, not exactly that way, but we'll be seeing an improvement in their existing margins in a couple of quarters going forward.
Okay, and then henceforth, we'll start seeing that improvement go further up as well. Sanjay, good morning. This is Vinny joining in the conversation as well. I want to talk about, you mentioned that addressable market, right, for the North America side of the business. $11.5 billion is that addressable market in 2025.
Yeah.
How much do you think is the market share right now over there? How do you see this growing for these companies as well?
Let me say what is our outlook in the next coming couple of years. I think this business can be easily $200 million business for us. May not be exactly 2 years or 3 years, maybe 3 or 4 years or something like that. But this is very much possible. That kind of customers, we are working with the biggest customers of the industries and service providers, like let's say, Exxon type of customers who are $500 billion value businesses, and so on and so forth. So they have been excited about, whether we'll be able to complete their requirements, etc. We think this is going to take us to a different level. That's the confidence and enthusiasm we have right now in the team.
Okay, different level, but you're saying that 68 million, which these companies are making as an overall revenue total turnover right now, will move to 200 million in the next 3-4 years.
Yeah, absolutely. That's the target we have internally right now.
And then your revenues would jump up by how much? Because this is already double. So in the next 3-4 years, what's your target overall?
So let's say that way, as we are holding the major stake in this company, the revenues will be added up in the consolidation. So standalone Finotex has been growing very well in the last 5 years. Finotex has been doing almost 45% CAGR growth in the sales and the profitability last 5 years. And also we have good kind of business attraction in the existing business of Finotex. At the same time, with the combination of CCT coming into picture, it's going to be quite exciting for us. So we are very much happy about this kind of acquisition which has happened recently.
Can we expect means 2,000 crores for you in the next 3-4 years then?
Well, I mean, I would not like to give such kinds of comments right now, but why not? The industry needs companies like us, and there is a good gap of opportunities, and there are companies and aggregators required like us who can facilitate the kind of entire single stop solutions for them, providing them technical support as well as providing them the services and the stock on good time. So we are already having a great opportunity going on in that direction.
Sanjay, just to clear the air, in the next 3 years, this entity where you have 53% stake could become a 100% ownership company. Is that a possibility in the next 3 years?
In the next 3 years, it will definitely become plus 75%. That's what we can say today.
Okay.
There's no doubt about it. Eventually,
and what valuation will it be done at? At the similar valuation that this 53% was done at, or will it be determined at that time?
Yeah, so the cost valuation will be on the similar things, but the EBITDA will be, of course, on a higher level. So we'll have a better kind of opportunities to get into.
So next 3 years, you'll be having 75% stake in this entity. And you're saying that the number goes to around $200 million odd in terms of a revenue. You're currently
That's the target we have.
You're currently doing around 550 crores approximately on an annual basis.
Correct.
If I put it together, and assuming some kind of growth in the core business that you have, Finotex Chemicals mathematically should be doing around 2,500 crores of revenues. Just want, directionally, is it correct what we are assuming? With high teen margins, is there a possibility?
Well, I can say that 2,500 crores, which you said about, is a long process to get into that directions. But definitely you will see from the next year itself, I mean, the calendar years from January itself, because the consolidation just will happen last week onwards. So this quarter, you will not see too much of a changes in the books. But from January onwards, if you're trailing values will be above 1,000 crores for sure, as the numbers are seen right now. So we are step by step, we are looking to ramp it up. And it's the things are quite visible right now for us to reach to the numbers which you just mentioned about.
Yeah, so 2,500 crores at 18-19% margins would mean that Finiotex Chemicals is headed to around 500 crores of EBITDA. Mathematically, it's possible in the next 3 years?
I would not know, not in the next 3 years, I would not say so. But yeah, this is something which is there on the cards. Right now, the aim is to integrate the companies together, get into the cross-selling, get the products more profitable and much higher EBITDA values. So yeah, there is a lot of action going on. There is a lot of hirings happening around. So we are totally geared into achieving what we are planning to reach, which is $200 million right now for the next 3 years in this sector.
Okay, and how much cash you have in your books? You know, you've been a company, if I remember correctly, that's been giving a lot of dividends in the past. Remember you all did a couple of buybacks as well. What is the current cash in books?
So the current cash in books is 225 crores broadly. And there was a recent preferential also where the promoters have invested further on and increased the stake, which will happen last 2 weeks back. So yeah, after that it's 225 crores odd at the moment, after the acquisition of this CCT.
So after that, 225 crores is on the books as of today, right now, for the company as well. Okay. Okay, perfect. Thank you so much, Sanjay, for joining us on the show, giving us details in terms of what we can expect from the company as well as synergies from this acquisition that has come in as well. Thank you so much for joining.
Thank you so much. Pleasure having. Thank you so much. Thanks for having us.
Thank you. On that note, we are actually, going to slip into a very short break. Don't go anywhere. After the break, we'll come back and talk about the markets and more stock-specific action as well.
Welcome back. Plenty of stocks in the broader markets are spiking up. Sterlite Technologies is the last one to be added to the list. That one's moved up. And Tata Motors CV business as well. That stock is seeing a bit of a spike up. Actually, both the Tata Motors listed stocks have moved up. But let's hop across to Gaurav. He's here on the brokerage corner to tell us about what are brokerages making of the big deal that's been announced. Shriram Finance. Gaurav.
Well, as Indian Financials saw the biggest deal in the history of around $4.4 billion worth of investment in Shriram Finance from MUFG Group on Friday. And after that, brokerages also turned bullish on the company. In fact, we've got a couple of brokerages for you. When we talk about CLSA, they have increased the target price to 1,030. They believe that this will strengthen balance sheet and at the same time, it will improve the profitability and also help the growth aspects going ahead because of the new avenues of growth. Apart from that, they do believe that ROEs will come down optically, but they will remain in mid-teens at least for the next 3 years. When it comes to IIFL Finance, they have also increased the target price to 1,200 rupees. They say that, in fact, if you look at the cost of fund, that is something that will be a key beneficiary here because they are expecting 100 basis point of reduction in cost of fund, and as a result, spreads will improve almost by 70 to 80 basis point. When it comes to growth, they are expecting growth to improve almost to 18 to 19% because of the faster scale up in MSME and gold segment, and they also expect ROAs in FY28 to reach around 4.5%. Nomura, they increase the target price, and at the same time, they also increase the AUM growth guidance almost to 20% versus what they were guiding earlier at 17%. For Jefferies, they increase the target price. They believe that the tier 1 capital will increase to 30%, which will actually strengthen the fact that they might go for credit rating upgrade and which will again further bring down the cost of funds. Lastly, we've got Kotak Institutional Equities. What they have done is that they have increased the target price to 990. They say that large capital infusion, which is around 66% of the total equity at this moment, can actually be a challenging because of the leverage that we can see in the company. So the ROAs and ROEs on the basis of that, but that will actually improve the debt market comfort, and that is something which is again positive for the company. So all in all brokerages are bullish. If you look at the foreign investor MUFG, they have already committed around $4.4 billion investment, so they are also bullish. So both these things are also giving market a reason to be bullish in the company. On Friday, we saw 3.5% growth, and today also we are seeing the same kind of growth. Remember, 12 p.m. is the time when they will have press release. So that is also something that we will be watching out for. So definitely let's see what management has to say on this deal.
Absolutely, Gaurav. surely we'll be keeping an eye out on the presser today at 12 p.m. Well, Umesh Revankar will be talking, so key updates will come in there from the management themselves as well. So that is important to keep an eye out on. But we have, Nigel, one couple of stocks I want to highlight is the shipbuilder stocks. They're buzzing away in trade. Coaching Shipyard, Masgao Dock, G Shipping, Garden Reach Shipbuilders. All of them is something that we'll be keeping an eye out on as well today, Nigel.
Going on a cruise?
No, I don't think so. I am, but seems like they're cruising away right now.
Well, that's right. We just had the management of Finetex Chemicals, guiding for very, very ambitious targets. Street is definitely listening into that interview. Take a look at that stock. It's moved to the high point of the day. But on that note, we'll have to wrap up on this edition of Chartbusters. That's it from Vinny, myself, and the entire team that put this show together. You stay tuned. The team of Trading Arm is coming up next.